Conducting a thorough market analysis is an essential step for investors looking to navigate the complexities of the British property market. One of the most significant factors that set the UK property market apart from others is its pronounced regional variations. Property values and investment potential can vary dramatically between areas just a few miles apart. This reflects historical development patterns, transport links, and local amenities, which can significantly influence property prices and rental yields. Understanding these nuances is key to making informed investment decisions. The British property market is far from homogeneous. Even within major cities, property values can differ significantly based on factors like proximity to transport hubs, the age and condition of the property, and the overall desirability of the neighbourhood. For instance, property prices in central London can be several times higher than those in more suburban or rural areas, even though they might be located just a short distance away. These local variations require investors to take a granular approach to market analysis, assessing each neighbourhood individually. Investors must pay particular attention to price-to-income ratios, a critical indicator of affordability within the UK property market. This is especially relevant in areas where affordability constraints may limit future price growth. In regions with high price-to-income ratios, the potential for property price increases may be limited unless there are significant changes in local economic conditions, infrastructure development, or supply-demand dynamics. Tracking historical price movements is also critical for predicting future trends. Platforms like Rightmove and Zoopla provide real-time listings and price histories, helping investors identify areas with consistent growth patterns. Land registry price paid data is another valuable resource that shows actual transaction prices, giving a more accurate reflection of market conditions than asking prices. Market liquidity is another important aspect of property investment. The average time properties stay on the market before being sold can provide insights into the health of the market in a specific area. Longer times on the market might indicate weak demand, whereas shorter periods could suggest that the property market is thriving. Vendor discount levels, which represent the difference between asking and selling prices, can also provide an indication of market conditions. High vendor discounts may suggest a softening market, while low discounts could point to high demand and competition for properties. Infrastructure developments can have a significant impact on property values in the UK. Large-scale projects such as Crossrail, HS2 and regional transport improvements have historically driven up property prices in areas with new or improved transport links. Locations near these infrastructure projects often experience a location premium, where demand for properties rises due to better accessibility. Local authority planning portals are also a valuable tool for investors. These portals provide information on future development activities, zoning plans, and regeneration projects that could affect local property markets. By understanding these plans, investors can anticipate areas that are likely to experience future growth and increased demand. Developing expertise in a specific geographical area is crucial for recognizing value anomalies and investment opportunities. This is particularly important in the highly localized British property market, where local conditions and regulations can significantly differ. Demographic data, available through census information, can help investors target appropriate tenant profiles. For example, understanding the age, income, and family size of residents in a particular area can provide insights into the type of property that will be in demand. In the highly competitive UK property market, local knowledge is often the differentiator between success and failure. By focusing on a particular region or even a specific neighbourhood, investors can become familiar with subtle trends that the broader market might overlook. Understanding the key drivers of a market, such as transport developments, employment hubs, and quality of life factors, gives investors the ability to spot lucrative opportunities before they become apparent to the wider market.